Fresco. This is the Forex Supermodel Racing Review and Forex briefing for Friday the 27th of January 2023. Nothing to review for yesterday on the racing, and yet again we're struggling on the racing. This will be the sixth day without a bet. So last Saturday was our last bet, which was a decent winner. But so the account static at 71.80 units in profit from a peak of 72, so more or less at the peak. Now, hopefully the racing will get cracking soon. Normally does. We have had periods where we've had this sort of gap. Obviously we could have chanced it, but there's not much point in doing that. So that's where we are with the racing. So on the Forex front, yesterday we thought there might be some potential for the Euro USD going long on that, but it didn't pan out. The market was chopping about, and so that didn't happen really yesterday. Now today we've got everyone's banging on about this PCE, which is personal consumption expenditure for the US. 1330 is it's supposed to be the Fed's preferred measure of inflation. Believe that if you want. So everybody's fretting about this US PCE, personal consumption expenditure. If it comes in a little bit soft, then you've got the Fed FOMC minutes next Wednesday. Then obviously they'll know what the data is ahead of schedule before, whereas us peasants don't. So you'll find that you get this probably significant risk-on rally, which will hit the dollar lower. Commodity currencies should charge up, and the one we like at the moment is AUD USD long, and today we think there could be a good pump up on the AUD USD FX pair. Gold is up high and has just come off a little bit, just to because they're wary. Likewise, the dollar index is mirroring that, so the dollar index has been low, just come up a little bit. And the US 10-year, the price has been rising, so yields have been coming off, and they've just brought the price off a little bit. So that's all in line really. And Wall Street has come slightly off its highs near a sort of daily double top-ish type thing. So potentially we're looking at the transmission. So it all depends on this PCE data print. If it comes in sort of neutral to soft, the market is likely to take it for a signal to hit the go button and front run the Fed into a lower inflationary sort of stance. So that will be good for risk assets. And particularly the AUD. Now the AUD has got the added bonus in that they've just had, Australia's had very strong hot inflation data and employment data, so they're going to be looking to hike as the Fed possibly looks to slow down. So you're going to get a double kick in the pants right there, potentially there. So anyway, if you're looking for a trade, that's what we'd suggest. Long AUD USD, obviously depending on how the market behaves, but it's a little bit soft at the moment as we go into the data, well, not even early morning. So we'll see how that develops. So that's what we're going to try and jump aboard anyway for your information. So anyway, thanks for watching. Sorry about the racing, but you know, if you don't bet, you don't lose. You don't win either. But anyway, we'll get back into it. So that's where we are. So thanks for watching. Thanks for subscribing, and goodbye.